Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past week, the market threw us a few curveballs, causing gold prices to swing up and down. It's been a tug of war between bulls and bears, making it hard to predict where prices are headed. The big players influencing gold right now are the Fed rate cut pricing and the central bank purchases. We're all waiting to hear what the Fed officials have to say this week to decide what to do with our gold holdings. So looking at the daily chart of gold against US dollar, we can see that gold has been fluctuating between 2,000 and 2,065 US dollars since early January, showing no clear trend. Within this range, gold steadily rose last week and briefly touched a 2-month high of $2,065 on Thursday before pulling back. By Monday of this week, it has pretty much erased all its gains of the previous week and tried to challenge the downtrend line since the end of December. However, that attempt failed and the bulls are back in charge, testing the upside again. Currently, the range bottom at $2,000 and the top at $2,065 are still important marks to watch. As mentioned earlier, the big factors influencing gold prices right now and since the start of this year are basically how the Fed is thinking about cutting rate and what central banks are buying up. Last week's job report was off the charts with 353,000 new jobs added, nearly double what everyone was expecting. It's a sign that the job market is solid. Also, the US ISM Services Index for January shot up unexpectedly to a 4-month high. With December inflation taking up a bit, there's all this talk about the US economy having a soft landing. Not crashing or anything, just landing gently. Now, if we look at the Fed's attitude, Chair Powell hinted that there's hardly any chance they will cut rates in March, while other Fed bigwigs like Bowman, Gooseby, and Master are saying the timing of rate cuts depends on how the economy is doing and if inflation is behaving, which could mean high rates sticking around longer. This has made the market rethink when the first rate cut might happen, with folks betting it will be pushed back to June. With everyone thinking like this, the yield on 2-year US Treasuries increased to 4.8% on Monday, sending the dollar soaring to 104.6, the highest it's been since November. And guess what? US stocks are still riding high. So when you think about it, trying to push gold prices up right now isn't really the smartest move. I mean, everyone's selling and gold prices are dropping. However, despite such strong bearish conditions, gold prices rose on Tuesday, indicating strong counterbalancing factors. According to data released by the World Gold Council at the end of January, central bank gold purchases last year totaled 1,037 tons, only 45 tons less than the record level in 2022. Therefore, I believe that central bank gold purchases are currently keeping gold prices above $2,000. With the approach of Chinese New Year, the increase in demand for physical gold is also conducive to stabilizing the lower limit of gold prices. Besides those big factors, there's still a demand for gold as a safety net. First up, there's risk in the financial market. When the New York Community Bank took a hit from falling commercial real estate values, people started wondering if it might kick off another banking crisis in the US. No firm answers yet, but it's got the Fed thinking about how high rates could spell trouble. That worry alone is enough to prop up gold prices. Plus, if market concerns about bank defaults ramp up, the Fed might think about cutting rates sooner, which could indirectly give gold a boost. Then there's a geopolitical risk. It's been hanging around in the background since last October actually, but there hasn't been much action lately, more like a stalemate. With the US presidential election coming up in November, Biden's gonna want a calm international scene, so he's likely to play it safe on the global stage. That means compared to how much we're sweating over the US interest rates, the news doesn't pack as much punch when it comes to moving gold prices. Overall, gold's kind of in a consolidation pattern right now, bouncing between good and bad news, which makes for some tricky trading. The fast talk of rate cuts is a big deal for gold prices, along with central banks buying gold and how the US banking sector is doing. And don't forget about what's happening in the Middle East that can potentially shake things up too. Compared to last week, this week's not as risky, but we're still going to keep an ear out for what the Fed's saying. If they keep hinting that they won't cut rates in March, gold prices might just stick to their current range without much of a trend either way. So that's pretty much for today. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!